Good. So let's move me out of the words. Good morning. Merry Christmas, everybody. Welcome to our fourth annual Christmas stream, which is kind of funny because the channel's only been around for a little more than 3 years. That's because we started just before the first Christmas, and we got it. We started the tradition. So that is absolutely fantastic. Hopefully you guys are all having a really good Christmas. Um, got lots of stuff we can talk about. I before the stream, I thought a way to start off the show was with a poem, "The Night Before Christmas." But of course, I was like, "Come on, Candace, that's a little lame." So I asked ChatGPT to rewrite it for us, and I don't know what she wrote. I'm just gonna read it straight out. Um, this could be funny. It could be very lame. But we'll have to see. We'll have to see. All right, here we go. 'Twas the night before. Not even Christmas. All right. 'Twas the night before the market, and all through the house, not a ticker was stirring. All calm in the house. The spreadsheets were saved on the desktop with care, in hopes that green arrows soon would be there. The investors were nestled all snug in their beds, while visions of dividends danced in their heads. And I in my toque, with my mug of Tim's brew, had just settled in for a quick market review. When out on the TSX there arose such a chatter, I sprang to my phone to see what was the matter. Away to the index I flew like a flash, opened my app and checked out my cash. The moon on the snow gave a luster so bright, it reminded me markets would open at night. In Tokyo, that is, for the global crew, where the first trades of Monday already flew. When what to my wondering eyes should appear but a chart for my ETFs climbing this year. With a savvy old trader so lively and slick, I knew in a moment it must be Saint Tick. More rapid than market bulls, his insights they came, and he whistled and shouted and called them by name. Oh, REITs on energy. Oh, sorry. On REITs, on energy, on growth stocks galore, on blue chip, on bonds, balance your core. To the top of the market, or to the top of the ladder, to the top of the wall. Diversify, diversify, diversify all. As the loonie flies up in a strong global trade, he hinted at sectors where fortunes are made. And then in a twinkling I heard on the screen the alerts of my broker so steady and keen. As I scrolled through my portfolio, already elated, the numbers were stronger than I had anticipated. He was dressed in plaid flannel from head to his toe, with a toque pulled down to keep out the snow. A bundle of insights he had in his hand, and he looked like the genius who owned the whole land. He spoke not a word, but went straight to his charts and filled all my watch lists with growth market smarts. And laying his finger aside of his nose, he nodded and gave me the tip as he rose. He sprang to his sleigh with his models in tow, and away he flew like a TSX pro. But I heard him exclaim as he soared out of sight, "Happy markets to all, and to all gains tonight." All right. Oh boy. Yeah, that was lame. That was very, very lame. But hey, nonetheless, why not? It's Christmas. Let's have some fun. Let's hit up the chart. We have Vineet in the house first with a Merry Christmas, everyone. Y Video's in with a Merry Christmas. I have a feeling I'm going to be saying that word a lot. Lisa comes in with good morning and Merry Christmas and a nice little tree emoticon. Larry says, we're doing breakfast shots over here. Holy banana bread. No breakfast shots here. I have my coffee, but instead of cream, I put eggnog in it. So it's an eggnog coffee. Bismarck, he says, Merry Christmas, everyone. I hope Santa was good to everyone. Yeah, hopefully you guys all had some good gifts and stuff under the tree and all that fun stuff. Sammer says, Merry Christmas for all. Funny Books is saying, Merry Christmas, everyone. And Luke is in with a Merry Christmas, everyone. Y Video says, "Oh, that was not that lame." Yeah, it was fun. It was fun. Nonetheless, it was fun. Let's see. Lisa says, "I thought it was cool." Y Video says, "Are we allowed to ask serious questions?" Yeah, of course. All right. Haggis Herb has got a lot of money, I guess. Great poem. Lisa has Bailey's, Bailey's in her coffee. Holy banana bread. Yeah, that sounds fun. That sounds fun. All right, Andrew's in the house with a Merry Christmas, everyone. Yeah. So yeah, I mean, guys, you can have serious questions. I will look up stocks, all of that fun stuff. I'll do what I normally do. I have no problems or no qualms with that. But in between that, I'll have Christmas stories. We're going to talk also a little bit later about Canoe. So Canoe EIT, they've got some news coming out on them as well. So yeah, it's going to be fun. And, I'll let you guys pretty much lead wherever you want to take the questions. But I'm going to start with my biggest Christmas surprise. So I was a teenager at this time. Actually, this was when I was in high school. I had always wanted a bookshelf at that point because I'd been, I'd been buying a lot of books and I, had them sort of sitting in piles. So that was kind of what I was looking for. But here's what happened. One day, long before Christmas, so probably in the probably September or something like that, I went downstairs and my stepfather was working on something. I walked in on him and he was doing some stuff with some wood, and I'm like, "Oh, what you doing?" And he's like, I'm making a plant thing for your mom for Christmas." I'm like, "Oh yeah, do you want some help?" And he's like, "Nope, don't need any help." He got rid of me pretty darn fast, but I bought it. I bought what he said he was doing. And here's where this became a huge surprise. So Christmas came. We did all the normal gift opening and everything, and I thought everything was done. Other than I didn't see these planters that he was making for mom. So he says, "Oh, I got one more gift," and he was like, "I got to go get it." And I'm like, "Oh, you want me to come help you?" He's like, "No, I don't need any help." So I'm just sitting there smug, completely smug, right? Because I know what's coming. Them planters. Mom's gonna love them. It wasn't planters. He comes up. It was the bookshelf that I wanted. So it turns out I walked in on him making my Christmas gift, but it completely caught me off guard. Like normally, it's hard. It's hard to keep a secret around me because I'm inquisitive, right? I find out answers, and not this time. This one absolutely floored me. I was not expecting it. Obviously, I had one of them smiles after that you ever have those smiles that are so big you're worried you're gonna like rip your mouth or something and end up looking like Guy Smiley. Yeah, it was kind of one of them. So, oh boy. But yeah, that was probably my biggest Christmas surprise ever. Let's see. Haggis says, "Happy Boxing Day, Canadians." Well, that's tomorrow. Tomorrow's Boxing Day. But yeah, which is kind of interesting thing. So, of course, the TSX is closed tomorrow as well because of Boxing Day. So we have to wait till Friday before we can actually do anything on the chart. So we got a little bit of a break up here, a little bit of the break. I do believe the New York Stock Exchange is open tomorrow because I know Boxing Day is really not a big thing. Outside of Canada, it's probably a big thing maybe in England, just because, I think a lot of our traditions, the ones that are different than the United States, usually we can trace them back to England. So that might be what's going on there with that as well. But going back to the surprise, because hey, we're just gonna talk. We're just gonna talk. One of the things that made it so hard to keep a surprise from me is that I would go to great lengths to figure things out. There was one Christmas, I think I was maybe was maybe 12, maybe 12. And I quite literally, I was left alone in the house for the afternoon. Nobody was going to be around. So I unopened every single gift and rewrapped it. I rewrapped everything, but I just wanted to know what everything was. Of course, after that event, my parents pretty much were like, yeah, we're hiding gifts from now on. Um, so, and it got to the point that I would find their hiding spots and they would have to start hiding it. Like mom would have to hide the gifts at other people's houses because I was just too curious. I was way too curious for my own good. So, what can I say? Bismarcky says, I believe Australia does Boxing Day too. But yeah, that would make sense, right? Because they also were part of the Commonwealth, and so they would have gotten a lot of their traditions from England or from Britain as well. So that is interesting. All right. Oh, here we go. We got a serious question. All right. Okay, here's my serious question. I have some LEV, so Lion Electric shares left in my portfolio, but I can't trade them anymore on the TSX and New York Stock Exchange with my broker since their bankruptcy. Usually what happens? Oh boy. A couple of things could happen. One, if they've gone bankruptcy and they have absolutely no assets, in a situation like that, you're usually out of luck. You can throw the S word at the beginning of that if you want. So SOL. Yeah, that can be. Now, what does often happen though is sometimes they will go through, and if they do have assets, the courts can sell those assets, and in that case, you might, if you're lucky, you might get some reimbursement, but more than likely, you usually end up in the SOL category because even then, when they do want to reimburse people from assets that are sold, they usually will start with the largest shareholders. So people who just have a few or have a small amount, um, not they're just not going to get anything. So chances are, write that off as a loss for now, maybe. And then if something does happen, then it's kind of like, ooh, unexpected, yay. But yeah, that's never good. Never good, never good. Will they be erased? Well, yeah, I mean, as we go further along, you'll see no mention of them. I imagine, like from what you've said, I believe that you said you can't trade them on the TSX and New York Stock Exchange. They'll eventually get completely delisted. That will happen with their bankruptcy, unless a miracle happens. And I've seen miracles happen where companies may have declared bankruptcy, but they've managed to come back. But chances are, I mean, look at them as just being artifacts. And if something does good happens, then yay. But don't get your hopes up. Don't get your hopes up at all. Luke says, are you sure it's not Bouncing Day in Australia? Kangaroo Day. Yeah. Well, I think Santa in Australia comes on kangaroos or has kangaroos pulling the sleigh or something. So there used to be a song. I think there used to be a Christmas song about kangaroos and Santa, but I haven't heard it in a long time. But that does remind me of it. Let's see. Eventually, Carl says, Merry Christmas all. Yeah, SOL is funny. I guess it is. Sammer says, does the CRA allow us to do options in the TFSA account? That's a good question. That's a really good question. Here's the thing. I was a little bit surprised that I've heard people actually say they were doing options in their TFSA because I didn't think that was going to fly. I didn't think that would fly just because options is kind of a way to, it's kind of more of an income, right? It's more of a business income. So that's the type of thing that the CRA doesn't like in the TFSA. So I heard a few people say with Wealthsimple, they're letting them do options in their TFSA. I was like, huh? That's a little odd to me. Personally, when it comes to options, I mean, conceivably, if they're letting you do it in your TFSA, um, and I can't confirm that because I don't know if they're letting, but if they let you do that in your TFSA, you're still going to have those same rules around day trading. So you'll be wanting, I would say you would want longer options, or at least don't do the same options twice. Like if you're running options on, let's say Tesla, we'll just use Tesla for an example. You probably want to be careful that you don't get into a situation where you're creating income by doing shorter options. So I am still a little surprised. Let me just double check to see. I'll double check and find out if the CRA will even allow it, because I was surprised when I heard somebody said they were doing options in their TFSA. I'm like, what? You shouldn't be able to do that. Mary says, Merry Christmas. Very cool. Very cool. Guys, Mary's here. That means it's time for me to have some coffee while you guys hit that good old like button. So hit the like button. Basically hitting the like button is your first step to getting on the nice list for next year. Wow, coffee is so much better with eggnog in it. Oh, definitely. Vic says, Happy Festivus. Yes, the good old Seinfeld version of Christmas. Love it. I love it. Carl says, Merry Christmas. Y Video says, thank you very, very much. Vic says, I put a bit of coffee in my Baileys. Okay. Yeah. I mean, you know what? This is that day, right? If you're going to drink and be merry, do it today. Do it today. Have some fun. Have some fun for sure. All right. The best coffee. The one day of the year where I don't drive. Fantastic. Fantastic. Actually, here's a funny thing. Tomorrow, so the 26th Boxing Day, is the first day in December I'm not going live. So it's like, wow. It's like, oh my gosh. I still have to do a little bit of work because I have a video coming out on Friday. So this morning I filmed it and I did do a little bit of editing. I might get a squeeze a tiny bit more in later, but I don't expect to get a lot of editing today. I have to dice cheese. I have to dice cheese this afternoon. So what can I say? Black coffee. Oh no, this is the eggnog has turned this quite non-black. I'm happy with it. Oh God, that's so good. All right. Joe says, Feliz Navidad. Absolutely. I always like that. It's actually funny. When I was a kid, a lot of there were a lot of different Christmas songs that I totally made up my own words for them because I didn't know what they were. So for example, there's that one that Bing Crosby does about Christmas in Hawaii, right? I think it's Mele Kamakam, something like that. As a kid, I used to say Illikanaka That was my word for that song. Illikanaka is the way to say. So I just made up my own words. It's just like, there's no chance of me pronouncing that. Now, Feliz Navidad, though, that was one that was, we had Freddie Fender, the Freddie Fender version of it, playing all the time. And that one was fine. But that Bing Crosby one, Illikanaka I think I still call it that. Even if I try to say the word in my head, I'm saying Illikanaka. So what can I say? Let's see. Vic says, I can't imbibe because I don't have to drive. We got some plain parcels. Plain parcels. Did I mention that I don't have to drive? All right. All right. Oh boy, look at this. Y Videos has gifted a finance membership to somebody. I have to look over here to see who won. Verena Kruger. Congratulations, Verena. And thank you, Y Videos. And Mary's coming in strong here. And of course, guys, just because it's Christmas does not mean that we do not have a goat. So Mary is now the Christmas goat. That sounds like a Hallmark movie. No, actually not. Hallmark probably wouldn't go quite that creative, but yeah, fantastic. Thank you, thank you, thank you, Mary. There we go. Actually, you know what's funny? Between well, I guess I was going to say between Y videos, but Y videos gave a gift of Arena. But Mary, you're my first official Christmas gift this year, so congratulations, awesomeness. Michael says, whoops. Speaking of coffee, I once wrote to Roger Sugar, which I hold, and suggested they advertise the use of maple syrup, which they hold in coffee, and never heard back from them. Oh no. Oh, Roger Sugar. I haven't looked. I really haven't looked into Roger Sugar in a while. I probably should. I really probably should. Let's see. They make maple sugar crystals. That's absolutely cool. Yeah, and it's so Canadian. It's so Canadian for sure. Let's see here. Cyber3, our warrior, says, "A Merry Christmas. When will we get to see your predictions for 2025?" Well, there's two different sets of predictions. So there's going to be two videos releasing. One of them is going to be my overall market predictions for 2025. I think that releases January 3rd. The other is I like to pick my 5 stocks to watch in 2025. So that one will be releasing on January 7th. So yeah, you'll have them both within that first week of January. So, and right now, the current video up on the channel, if you haven't seen it yet, I'm going over last year's 5 stocks that I picked to see whether I got them right, got them wrong. Should I hold my head in shame, or should I maybe bask in some, yeah, I picked some good stocks. You got to watch to find out which it is, but yeah, absolutely. Vic says Metallica ought to come out with a Christmas album. I know. I'll tell you, this is funny. I had no idea that Twisted Sister had a Christmas album until a few years ago. I just happened to, I stumbled on it and I'm like, what? Twisted Sister has a Christmas album? And here's the other thing I learned. This I only learned this year. Something I was watching on YouTube, and it turns out that when Twisted Sister, it makes it sound like I'm a big Twisted Sister fan. I'm really not. But when Twisted Sister was writing We're Not Gonna Take It, they didn't have the music first. They were trying to come up with the lyrics. And what's his name? Is it Dee Schneider? Is that the name of the head singer guy? He actually sat down and he just set the lyrics to "Oh come all ye faithful," and so I was like, oh. And then now that I know that, and if I listen to that song, I'm like, I can hear it in there. It's sort of it's like they kind of converted it into the song. So it was kind of interesting. Anyway, Y Video says, congrats, Verena. She'll be very thankful. I don't think she's here, but she'll definitely be very thankful. GOAT, question mark. GOAT. So Haggis, GOAT stands for greatest of all time. So anytime somebody donates, like does a super on the channel, I play that little GOAT, and they get the titles. They become the greatest of all time. Just part of my way of saying, hey, thank you. Also, in addition, since we mentioned it, those donations go straight into the 0 to 100K challenge. So that's why somebody asked me a while back. They said, how long will it take to get to 10,000 or sorry, 100,000? I was just like, well, I'm adding $500 a month to it because, and then plus on the super. So somebody could technically come around and, next, in 2023 or 2025, sorry, and just say, here you go. Here's $100,000 super. And then I'm like, oh, great, we're done. That's not going to happen, but nonetheless, I found it it's kind of an interesting thing. So I definitely appreciate everything that you guys do. A Y Video says, I work for Roger Sugar. Ooh, nice. Hopefully it means that you work for the company, and not that somebody's making you work and every so often they give you a, a Roger sugar cube or something and say, here you go, work harder. Yeah, I have a feeling it's the first, but the second one popped in my head and it seemed funny, so it had to come out. Let's see. Montreal plant is under a big expansion project. Yes, I remember. I had a story on this week about that. Oh gosh, probably last summer, maybe. It was a while back, but yeah, for sure. Haggis says 5 stars. Let's go 166%. Yeah, absolutely. And Vic says, Canadians to Trudeau, we're not going to take it anymore. I know. It's actually funny. I actually I actually watched his little Merry Christmas thing yesterday. And I think I was watching it just hoping that he was gonna let something slip, that he was thinking of maybe stepping down. But it was nice to know that that's probably the last time he's ever gonna have the opportunity to do that. So that is definitely something to think about. Oh boy. Yeah. I mean, it's going to be interesting. I mean, this coming year, 2025, there's going to be so many changes. Here's what, and this is, I'm kind of thinking, I've been sort of sitting back here and thinking, like, I've been saying that we're probably going to see a spring election, but here's what I almost kind of think might happen. So here's I'll give you a prediction right now. Here's my prediction. Late January, as the parliament's getting ready to come back, that's when Trudeau will prorogue it. He will prorogue it. They will have a leadership, like he'll step down. They'll have a leadership convention. And, that might give them another couple of months before the new government can come back in. And then, there'll still be a vote of no confidence that will come. But that might push that spring election closer to summer, like, late spring. But it could be very, very interesting. But at the same time, and you have to keep in mind, even though Jagmeet Singh is saying, oh yeah, we're going to do it at our first available moment, it doesn't always mean, because he could, especially if they did the proroguement and brought in a new leader. I mean, he could always say, well, it was Trudeau that I needed to step down, but maybe I can work with this government to continue with, I think at this point, dental care is far enough along. He's probably wanting to nurse the pharmacare part. All right, good. And let's see. Sucro, the new player in sugar, is trying to undercut Montreal expansion with their Hamilton expansion to get more parts of the huge Toronto market. Lots of big food companies in Ontario. Oh yeah, absolutely. Yeah, it's going to be very interesting. I mean, the only thing I can say is with any of these sugar companies, most of the retailers are looking for a pretty sweet deal. Yeah, I went there. But it's Christmas. If there's ever going to be a time that I'm just going to go there and drop a very, very bad joke, it'll be the holidays. So, what can I say? All right. I did mention before let's quickly say Merry Christmas over here to JJ. Howdy, Merry Christmas. Nice. Let's see. Sucro is public too and traded in Vancouver. Yeah. I think between the two of them, my money is still on Roger Sugar. But what can I say? Last night was a late night. Uh-oh. Or are you like Santa's mod as well? Is that kind of what's going on? Your double duty? Let's see. Michael says, I have held Rogers for years. For yield, not growth. Yeah. And that's kind of the whole thing with them, is they do have a nice looking yield. All right. So I mentioned that we had some news on Canoe EIT. So no, they're not going to an 11-cent dividend, but they did announce another special distribution. I remember they did one of these. Oh my God, it was what was 4? It was 4 years ago that they did. Well, technically 3 years ago, but 4 Christmases ago. They did one of these way back when I first started, and it was actually really interesting. So everybody kind of thought that it was that they were going to just give out, I think even then, I think it was roughly 44 cents a dividend as well. Everybody thought, oh, we're all going to get a 44-cent dividend. I remember everybody going on. I actually, their publication was kind of confusing, the initial stuff they sent out. So I was even like, okay, sure. This sounds great. So I stocked up on some more Canoe. But it turned out they were doing a slightly different way. So instead of actually paying a dividend, they were doing it through basically adjusting the adjusted cost base. Now, here was the interesting thing. Last time, they claimed, and I this is one of these things I think is odd. Last time they claimed that they were actually lowering the adjusted cost base, and I didn't think that made sense. I really didn't. I thought it was kind of hanky, and I reached out to Canoe at that time and talked to their customer service, and they were like, yeah, that's just what we're doing this year. But now this time around, they're doing it again, but this time, they have clearly stated that they're raising the adjusted cost base by approximately 44 cents. They'll have the final numbers out in January. So what does this mean? What this means with what Canoe is doing right now is that, for one, if you're holding it in a registered account, and most of us have it in registered accounts, it means absolutely nothing. No gift for you. No gift this year. But if you are holding Canoe in a non-registered account, well, this could be interesting, because let's just say, well, here, you know what? I need to actually bring up the thing here. You guys know the thing. All right. Let me pull this over. I want to go to the whiteboard. Here we go. Awesome. All right. Let's get away here. So let's just say, for example, let's say you have an adjusted, let's say you bought Canoe at $10, whatever it is you bought, and you're holding it in a non-registered account. So what they're saying that they will do is they will take that adjusted cost base and they're looking to increase it. So in this case here, you would end up have a adjusted cost base of 10.44 if 44 cents turns out to be the number. Now, where this, why this is important is, let's say, so right now Canoe, we'll say Canoe's at 15. I know it's a little bit higher, but let's say right now Canoe is at $15. So if you had 100 shares that you were going to sell, we'll just use 100 because that's a nice even number. And you were going to sell it at this point here, you're looking at $5 a share. So that would be $500 that, and then of course, half of that would be like $250. So you would end up paying taxes on, $250 of that $500, because that's kind of what your capital gain would be. So, but in this case here, instead of $15, it's going to be $14.56. So, that's kind of interesting. So, you end up not paying as much. So I'm not going to do the math on this, other than this would be, well, 145.60. Actually, it wouldn't. It would be much higher than that. Times that by 5. But nonetheless, you end up paying you end up having a smaller capital gain because of it. This is math I probably should have done before I came out. But yeah, the general idea, though, is that extra 44 cents is taking away some of. So in a nutshell, that 44 cents, you're going to save about 22 cents per share if you were to sell. I mean, if you do nothing, then it doesn't matter. But that's kind of what they were looking at for that. So anyway, that's that's what Canoe is doing again this year. It's it's Canoe. It's like, I would much rather they just give us an extra dividend. Then everybody can benefit. All of us holding it in registered accounts. It's like, give us that extra dividend. But nope. Nope, they're doing it through the adjusted cost base again. It kind of sucks. It kind of sucks. But outside of this little maneuver that Canoe does, I still love Canoe. I definitely still love them for sure. All right. Yeah, I deserve the duh. Um, let's see. JJ Montreal had a nightlife scene. Ne sais pas. There we go. Still, but less than 20 years ago. All right. Your Damids says, a Merry Christmas to you and yours, and a Merry Christmas to all your viewers. I am a new investor looking to take advantage of the TFSA. I'm in my early 50s. What sector should I be looking at? All right. Well, if you're a new investor, I will point out right now, as you're learning what it is you want to do with your TFSA, I would be looking more at ETFs initially. Look at some, for example, all right, whoops. So like VFV is a good one. This here will give you like S&P 500. All right, here we go. VDY is another good one. This will give you like TSX. And, I'm just giving these two as an example. Something like an XEQT. This here is going to give you your, basically, this is an all equity. So it will give you exposure to not just Canada and the US, but it'll give you exposure to Australia, Europe, Asia, and emerging markets. So I would start looking at, just getting some basic ETFs in there. Start, and you don't have to use the VFY. There's a lot of different ones that do S&P 500. But I would just look to get exposure to the S&P 500, get exposure to the TSX, get some kind of an international exposure in there. By moving in that direction initially, that means you don't have to worry so much. And these are kind of like, you can sort of park them and forget them type ETF. So you don't have to worry so much. That's great, which is really good. Then that frees you up to start, getting a hang of things. Giving you a chance to learn more about investing as you move along. And then at that point, you can sort of start looking at things as you start getting a really good understanding. You can look and say, okay, all right, I'm starting to get this. And then you might at that point say, okay, well, let's look at things like covered call ETFs. Maybe I want those dividends. Or you might be thinking, I kind of want to start holding individual stocks. And that's another option as well. Like then you're starting to look. So instead of looking at something like this, you get your individual stocks and you have to then diversify them that way. So for example, with the TSX, you're going to be looking at hitting your different sectors. So your energy sector, your financial sectors. So you'll like maybe, for example, with your energy sector, you might say, okay, I'll go with your financial sector, you might go with CIBC, or you might go with Scotiabank. Your energy sector, you might go with something like Enbridge, or you might look at Torlamine. And keep in mind, within that energy sector, you could technically, and sometimes it all gets lumped together, but you could call utilities a separate sector. And Enbridge is a company that kind of fits in both, although it's heavier into the utility than it is into the energy part, because pretty much what they do for energy is they do a lot of the pipeline stuff. So a lot of the downstream, and they're moving a lot of the gas. So they're not doing their own drilling per se. So they do more utility in that matter. But something like Torlamine, of course, they do a lot of that drilling. So you start to get a feel for the sectors. Then you can look at bringing individual stocks in. And even then, I mean, there's nothing saying, like, if you get some really good ETFs as your core, you could always then sort of fill things out with other stocks. So for example, tech. Right now, we don't have a strong tech component in Canada. So you might want to, I mean, we have some good tech companies, but we just don't have it's not as strong as it is in the United States. So you'll see, every so often, you'll see things like this. You'll see QQQ. These, of course, are usually meaning, the Q means NASDAQ because of the Q in NASDAQ. So you'll see different things like this, like you might see, like XQQQ or things like that. And these are all going to, or QQQY, these are going to be ETFs that will give you more exposure to tech. And excuse me, right now, tech is, they have been doing really well. And, I personally don't think the AI bubble is done. We've already had so much come out just in December with AI. Even OpenAI, they're coming out with their next model here, O3. Right now, it's going through safety testing. So right now, their current model is O1. I cannot tell you where O2 went. I think they just decided to skip it. Maybe the next one after O3 will be O5. Maybe they just don't like even numbers. I'm not sure. But I think it's still going to be strong. And as AI moves from being just a general, like a question and answer like ChatGPT is right now, they're moving into what's called agents. So agents is where that AI can do all the stuff for you. So you could basically say, okay, I need you to, book a trip for me, and it can take control of your computer, go on the internet, find the best deals, and even do the whole transaction and everything. And next thing you know, in your email, you've got your plane tickets or your boarding passes or whatever. So that's kind of where we're moving, and that is where, especially for investors, the biggest problem investors have had, because tech has had a little bit of a rough ride here in in the second half of this year. And it's basically investors saying, we don't understand how you're going to make money from all of the investment you're putting into AI. But with video agents and some of these new things that are starting to come out, it's going to be a lot clearer how the tech companies are going to get their money back. And that will be really good for investors. And I think that's going to help. I think that will definitely be good for tech overall in 2025. But the nice thing is too, I will have some videos coming out. Actually, I've got my prediction video. In my prediction video, I do predict the sectors to watch in 2025. So we're actually going to break down on the New Year's Eve stream. We're going to break down my predictions for 2024 and see how I did on those. So that's always fun. That's always fun. All right. Sammer says, I think in 2025, the new trend will be quantum computer. So any stocks on your radar? Not yet. Not yet. But yeah, they did release, I think it's called Willow. So that is a chip, Google chip actually, that has, instead of bits, it has qubits. So basically like a bit right now, if you're familiar at all with computers. So a bit is basically binary. So it means that it can be on or off. That's it. You've got two choices. And by turning things on and off, that's how computers work. But they do it in big, massive scales. But what it does mean is that they can only do things step by step by step. So that limits how fast computers can be. When you go to a qubit, so a qubit takes some of the properties of quantum mechanics. So it can be on, it can be off, but it can also be a whole bunch of states in between. So because of that you're not limited to 0, 1, like with a binary, you can run massive amounts of computations all at the same time. So some of the things that a full quantum system would be able to calculate is they could basically run through calculations that might take a regular supercomputer that we have today. It might take it thousands of years, like even more than thousands of years. I've heard some really big numbers, but for our little minds right now, we'll just use thousands of years. So if you got something that takes thousands of years to run on a regular computer, and you got this new technology that can come in and do it in like 5 seconds, that's huge. That will be one of those things where when we start looking at advances, take science. So a lot of times with science or in developing a drug, you have to run through so many different trials. But you'll be able to take between AI and quantum, you'd be able to basically run everything virtually and come up with really good solutions that we could then move into actually testing it. And that's going to get us to I think that's going to cause a big advance in science, and that's going to benefit everyone. So yeah, this is huge, absolutely huge. But now keep in mind, this Willow chip that Google has introduced, we need to see it actually in action. We need to see more than just a chip. We need to actually see it performing, see them actually rolling it out, and get some kind of time frames on it. But the overall excitement, I know that there was, and I don't remember what the stock was. There was, I think it was a US stock, a quantum stock that apparently went up about 900%. So yeah, there is definitely some money there to be made. But at the same time, we're talking, in most cases, we're talking some of these stocks are like penny stocks that are just going to explode out of the gate. But I think just investing in tech in general, you're probably going to get to ride that wave as well, just like you're riding the AI wave. All right, why videos? CFRA overweights communications, information technology, and financials for 2025. Okay. I'm not sure what you're asking, but okay. Let's see. Google. Merry Christmas to all. Let's see here. JJ was at a Christmas party till 3 a.m. Oh boy. It's like Santa Claus broke up the party and said, "Get back to sleep, folks." Then drive an hour to get home. Oh boy. So when you suggest an S&P 500 ETF, do you think a Canadian hedge version is a good idea? I look at it a couple of ways. So for example, I still have it up here. So when you look at VFV, let's get a different marker here. So when you're looking at VFV, this is your Canadian version. So it is Canadian hedged. It's absolutely fine. Now there's also an American version of it, VOO. Now this here is a US one. So it is basically, they're holding the same stuff, but in this case, it's a US one. So that's one of the reasons that I always say put this one. If you're going to go this route, you want to put it in your RRSP so you don't have that 15% withholding tax. So if you put VOO in your TFSA, there's a 15% holding tax. Now, here's the thing. When we look at this, when we look at the VFE, yeah, there's no withholding tax if you put it in your TFSA, but there is. It's kind of a secret withholding tax. So when Vanguard Canada, when they invest in all of the stocks that are in here, what ends up happening is the IRS, they're looking at the stocks going to Vanguard and they're like, yeah, we're gonna take 15% of those dividends. And they do, they take 15% of the dividends. But from your perspective, Vanguard doesn't, they don't charge you 15%. It's already taken out of the calculation. So when you look at the dividend yield, like for example, if you're in TMX, that's the dividend yield that already, the 15%'s already been removed from it. So you don't have to worry so much about it. And here's a funny thing, and I have to look more into this. I did a recent video on VFV, and I compared it to VOO, and it actually outperformed it. But that's there are other considerations in there because you're looking at Canadian money. There is currency differences. Those can certainly impact things, but I thought that was just very, very interesting. Let's see, YMAX for the win. Oh yeah, YMAX is a good one. Let's see. Merry Christmas, Missy. Merry Christmas to you as well. Sue is in. Merry Christmas, everyone. We get more of the Merry Christmases. Why videos? Oh, for CFRA, I mean, it's their sector predictions. Oh, okay. Okay, fair enough. Sammer says, RGTI is one of those quantum computer stocks. Up. Yeah, look at this. 1,133. And let's take a look at this RGTI. Let's actually go over there. I'm kind of curious. I've not looked at this one. RGTI, here we go. So yeah, like right now, it's at $11.35. And let's take a look at the year. So yeah, basically around the time as all of the stuff from Willow was coming out. So it was, now it's not, it was, it was a penny stock, but 77 cents to 11.35. That's craziness, but that would be a nice ride to take. Yeah, absolutely. And I think we're going to see a bit more of this as we move forward. So just something to keep in mind. And what I will be, and here's the thing, I look at things like this, things that are riding a wave, like quantum computing or AI, and I am more inclined to find an ETF that's sort of covering them all. And I'll tell you why. Because maybe there's 100 of these quantum computer companies that are trying to ride this wave. They're not all going to be successful. Some of them are going to crash and burn. I would always be worried about hitching my wagon to one that crashes and burns. So if you get an ETF that's looking at this sector for you, then if one of them crashes and burns, it's one in a small basket. So you're usually not going to get hurt very much by it. And then they're going to get rid of that and they're going to bring in another. And that's kind, to me, that's the safer way to go. So same thing with AI. Now with AI, the nice thing with AI is the bigger stocks, your Nvidias, your Microsoft, your Apple, your Google, they're all safe. They're all safe bets. They're all blue chip. So you don't have to worry about them. It's just that when you start looking at a lot of the small AI startups, you want to be a little bit more careful. Yeah, I mean, it's in Canadian dollars. It's not hedged the way that you might think of a. So, for example, like CDRs are Canadian hedged. So that would be a better example of Canadian hedged for sure. Let's see. JJ says, personal opinion, Canadian hedging for American tickers is a bad idea. Yeah, I mean, to me, it really depends. In some cases, like for example, with CDRs, I think it's fine. And what I like about CDRs right now is where the Canadian dollar is kind of cheap. It's not being impacted in the same way as if you tried to buy the American stock directly, because then you're dealing with that larger conversion. But, and this is the big but, as CIBC continues to buy more of the underlying asset, then they are, and that will then eventually filter into the CDR pricing. So it's kind of one of those things, but I'm hoping our Canadian dollar can get back to 70 cents. But right now, I see it getting worse before it gets better, because and here's this thing. We're in the situation because the American economy is so strong, and the Canadian economy is crawling, like really, really crawling, like it's almost, it's bad. Because of that, we will need, much more rate cuts than what they're going to get in the States. If the US only has a couple of rate cuts over 2025, and we have quite a bit more, that is going to put us quite a bit off the track of our monetary policy versus the US monetary policy, and that will impact the Canadian dollar. Unfortunately, it will. But I'm hoping. I'm just hoping that it doesn't get too bad. Now, if the tariffs were to actually go ahead, that would be another issue altogether. Yikes. Let's see. Vaughn is here, but late, but here. Oh, wonderful. Welcome to the stream. Let's see. RGTI is on my watch list. And Ian just pulled in. Hello, Ian. Some people fear that Bitcoin could be hacked by quantum computers in the future. No. That's the thing. The problem is the way Bitcoin works and the way the blockchain works. You can't really make changes to the blockchain without making changes to more than 50% of all the nodes on that change. So quantum, it's not like it's an straight up encryption key that you're trying to break to get into to do anything to Bitcoin. You actually would have to simultaneously, you would basically have to take control of more than 50% of the nodes to make any kind of change. And even then, it's all backed up. So the odds or the chances of quantum computing actually cracking or doing anything to Bitcoin are very, very slim. So I'm not concerned about that. Now, I know when that chip got announced, Bitcoin took a little bit of a tumble because people were like, oh my God, Bitcoin's doomed. But it's not. It's really not. I don't think you have anything to worry about. Missy says, research says Canada is the only country that is better off unhedged. Not sure why. Yeah, it's I think it's just more or less the volatility of the Canadian dollar, but, you know, I I would have to look more into that to go into any more depth on that one. All right. Anyone bring up the Hoya Capital REIT yet? Um, other than you, I think you mentioned it to me the other day. Was it? I think it was you. Somebody did. Now that is the one that is. All right. There we go. It's actually spelt incorrectly, so it's not spelt REIT. It's RIET. But yeah, I think we looked. I know what we looked at this, but let's just pull up their 1 year. So yeah, this is one here that I don't anticipate a lot of growth out of this one, but they have a pretty good dividend here. Let's see here, 10.108. So it's more of a quantum. Let's get quantum out of my head. It is more of an income stock, so it is pretty solid. Now I'm going to go even further out. And you can sort of see at one point they were up, they were way up, but now since about here they've been more or less moving forwards. So you've got a bit of a range. So it is playable as well. Depending that if we continue to get this volatility, it might be not a bad choice for swing trading, but it's more or less an income stock, for sure. Let's see. Quantum ETF is up 55% year to date. It has RGTI and QBTS as a top holding. Yeah. So let's take a look at this here. Give me a second here. Quantum. All right, here we go. QTUM. There we go. All right, here we go. So Defiance Quantum. Here we go. Pull it up here. And yeah, see, this is one to me is going to be safer. You may not get some of the crazy returns, but going from $60 to $82 is not a bad thing. It's not a bad thing at all. But this would be something that I would be more interested in, something like a quantum. And even still, let me just take a look here. I don't think it's going to have dividends, but no, it does. Look at this. It actually has a small yield here, 0.613. So yeah, like this here being a US one, this is a US one I would be okay with holding in my TFSA because it doesn't have a lot of dividends. It's mostly all going to be growth. So that's not too shabby. All right. Let me take a look here. Let's see. Thoughts on PFLT. Let's pull that up. All right. So Pennant Park Floating Rate Capital. Interesting. Now, this is a new one for me. I've not seen this one before, but let's see. They got a half decent monthly dividend, 11.326%. Just want to back out here to see. Okay. So I can see they have sort of same kind of general idea as that REIT one we were looking at. So yeah, they're moving kind of they got some volatility here, but they're mostly income right now. So that's fine. There's nothing wrong with that. Let me take a quick gander in here. The return on equity, 12%. That's fine, but they don't have a ton of debt. 51% debt to equity ratio, so that's not too shabby. All right, there we go. 0.102. So basically, you're getting a little more than a dime every month, but it's not that bad. It's not that bad. 1086. But this, of course, being a US one, you're gonna want to put it. This one here, I would probably look at my my RRSP, because if you're holding it anywhere else, you are going to lose 15% of that dividend. So just something to be thoughtful of. A Y video says quantum ETF, good idea, good for the FOMO. Yeah, exactly. It does help that way as well. Missy says, will quantum be added to QQQ? Not for a while. And also, actually, yeah, it's a ETF. So Samer's right. They don't add ETFs, just single stocks. Yeah, it's kind of an interesting thing like that. But yeah, now, mind you, some of the underlying quantum stocks, if they get big enough, they could get added to the QQQ. But Probably not anytime soon. All right. Let's see. Ian says, good time to add a ENCL, ENCC position. How secure is the dividend? So yeah, so ENCC and ENCL. So these here are oil. So we'll go to ENCL. So Global X Enhanced Oil and Gas Equity. I do like this stock. Now, once the price starts to rebound, this is going to be really, really, really good. Now, let's pull up the 1 year. They haven't been around that long. Actually, have they been around for already a year? Holy banana bread. Let's see here. When did they start? Oh yeah, yeah. So October of last year. So they've now got a year under their belt. And you can see this topsy-turviness when it comes to this is kind of the playoff, right? When you're going with the ENCL version, it has leverage, so you are going to move up bigger and down bigger with that. So you kind of have to get used to this volatility. So and I'll show you an example here. Let's go to the ENCC for a second. This is the one without the leverage, but it's the exact same. We'll go to that 1 year, and you can sort of see it's doing the same kind of thing, but it's much less with the peaks. But at the same time, this one here, you're getting a 14.607, like they are using covered calls. The other one, let's see if I can get back to it directly. There we go. You're getting an 18% yield. So it depends on what you're using it for. So if you're using this for income, yeah, it's a fantastic one. You're going to get a pretty good income from it. And once oil does start to rebound, and it's going to be interesting. I think 2025 is going to be very, very interesting for the oil sector because we got a couple of things. We got Donald Trump coming in with his whole drill, baby, drill. And we've got a market right now where there is a saturation, as in supply saturation. So we have too much supply for the need currently. So that could potentially lower oil a bit more, which could be, better entry points for some of these oil stocks. But, and this is kind of interesting, I had somebody actually in a comment say to me the other day, they were like, oh, well, that's going to lower things like Pembina, Pembina pipelines and Enbridge, because of the transportation, because there's, the oil price is down. And it's like, no, not necessarily, because you have to realize if you have, let's go to our thing here. So if you have, so let's say that's the amount of oil that we need, but we have this amount. So we have too much oil. Well, the reality is, though, our pipelines, right, they're still going to be transporting the amount that we need. Just because producers of OPEC produced more, or the U.S. or Donald Trump decided to drill, baby, drill, and we've got all this extra oil, doesn't mean that these all of a sudden are going to be transporting less. They're still going to be transporting the same. So for that reason, a company like, I'll use PPL right now. So Pembina Pipelines, they're still going to be, they're still going to have the same demand that they normally would have. Now, this is because of this. Now, if we have a situation like, let's say, for example, over in Europe, I'm just going to use Europe, but actually, you know what? This is in North America. Let's just say in North America. Let's say in North America, all of a sudden, we have a warmer year than normal. So let's go up. We'll say, let's just say, I'm just going to come in with 5 degrees Celsius. So let's say we have like an average of 5 degrees Celsius in the northern latitudes, instead of a normal of, let's say the normal was 10 degrees Celsius. So all of a sudden, if you've got that big temperature difference, then we're not using as much oil. In that case, this here will shrink down a little bit. And because it's gotten a little bit smaller, it doesn't matter how much we have, but the need's gotten smaller. Then there'll be less going through the pipelines. Then it would hurt the bottom line of like a Pembina pipeline or Enbridge, that type of thing. So keep that in mind, that by having too much, it doesn't necessarily impact a Pembina pipeline or, an oil carrier. But it will impact, of course, the price of WTI, because if there's too much on the market, you don't have to pay as much if you're buying oil. So that's something just to keep in mind. All right. Let's see here. And JJ saying a good time to pick it up. Let's see. If you don't call covered calls, then XEG would be that equivalent. Yeah, XEG is one of these. I love XEG. I actually hold XEG in the 0 to 100K. I'll show you XEG here. It is a oil ETF. Now, this one has no covered calls. So the nice thing is with XEG, let's see here. There we go. I'm going to pull up. Just going to pull up the 5-year. You can see, like, here's the pandemic. XEG, they have been doing really well. And you can see there's even less volatility here than what we've seen with most oil stocks. So and that's because, XEG, they're an ETF. They are buying a whole bunch of different, some really good companies in there. Like they'll have Torlamine, they'll have Imperial Oil, all of the big ones are in there, Suncor. But yeah, they do really, really well. But you're not going to get a big dividend. So you're not getting that. You are getting a little bit. It's a quarterly dividend here of like 3.127%. You're getting that. That's fantastic. But this one here has that potential for growth. And when oil does explode, so for example, if we had, let's just say we have, I'm just putting it here. We have a war. Yikes. I probably shouldn't have used red for that. It's too dramatic. If you have a covered call ETF, well, they are going to go up like this. You have XEG, because they don't use covered calls, they're going to go up like this. And why? Why is the difference? Well, because with the covered calls, they they have to write options. So one of the options, so for example, they might say, and just trying to think here price-wise, we're just going to use some simple prices. They might say, for example, our stocks are worth right now, let's say their stocks are worth $15. So they might write an option that says, okay, if our stock gets to, let's say $18 by, let's say January 15th, then you have the right to buy at $18. So that becomes their strike price. So if by January 15th, you have the option to buy this at $18. So fantastic. So as time goes by, and let's say we have that war come in, all of a sudden the price is, we'll say it's $25. Well, hey, the person who bought that option, they can get this $25 stock and they only have to pay $18 because that was the option. They paid a premium to get that. So they got a little fee here for that, but that's a great deal for that buyer. So what ends up happening with these covered calls is in times of big volatility where prices explode, is all of a sudden, if this happens, you know what? They've lost that, that little gap there. So that's basically $7 that they've lost, because they're now forced to sell at 18 and they still need more of these. They still have to buy it back for the fund, but they have to buy it back at 25. So they've now lost that potential. So when you're looking at the chart with the covered call, you may have something that looks like this. And when you got XEG, it's going to come up like this, and depending on how big things explode, you're going to get this big difference. And that's just because of upside potential that you've lost because of these options. So just something to keep in mind with this. So for example, if it looked like there was an imminent war about to happen in the Middle East and things were getting bad, I would probably be pulling out of my, anything like ENCL, ENCC. I'd probably pull out, move into something like an XCG, and to ride through that. And then once things stabilized, then I'm going to make more money with the covered call ones. I would then, shift back to a heavier amount of those just for that reason. All right. Let's see here. Burger says, bullish on BABA for January earnings. I expect US to be back at 1 to 120. Let's go 2x bull. Oh, yes. So those of you who do not know what a 2x bull is, basically it's an ETF that's predicting that market or that asset's going to do really well, and it's using a 2 times leverage. So you got to be really careful with those, because if you jump on a 2x bull and that stock tanks, you're losing it at 2x value. So you want to know what you're doing. Obviously, Burger's been playing this game for a while and manages other people's money. So Burgers knows what he's doing for sure. Let's see. Yvonne says, if you had to select any 3 Canadian stocks for 2025, which one would you choose? Tune in to the January 7th video. I won't even do 3. I'll do 5. I will find my 5 stocks. Right now, if you look on the channel, the video that dropped a couple of days ago is it's looking at the 5 I've chose last year and rating everything. So you can sort of see how I did for my 2024 prediction. But yeah, the 2025 one, I'm going to be pulling that out for January 7th. So I haven't even pulled my preliminary data yet. So I don't want to give an answer on that. Let's see. Burger says, expecting oil back to $80 for the summer. Okay. That's a possibility. Yeah, for sure. Let's see, ENCL expense ratio 2.82. That is quite expensive. Yeah, if you look at a leveraged, so covered calls adds a bit more complexity to that ETF because the managers have to do much more. Add leverage to it, and it adds it even more. So you are going to get a bigger management expense ratio when you are dealing with some of those funds. But you're also going to make some money if you're playing them right. You're not going to worry so much about that. All right. Let's see. Your Damas says, with the Canadian government committing to spending more in defense over the coming years, would a company like CAE be something to consider as a growth stock? All right, let's pull it up. There's the Discord. We have a Discord, guys. Link down below. CAE. Here we go. All right. So, and we're talking defense. So one of the things you want to take a look at is this here is a company. They do a lot of training, right? They do training. Let's see, delivering training for civil aviation, defense, security, and healthcare markets. So, yeah, I mean, it potentially could be a good option. But let's take a look here. They've really pumped a lot recently, and it could be some of our commitment to defense that is pushing it up. I want to check one more thing. I'm just going to go into the back end here. All right, let's see. These are down a little bit. That's fine. Their debt, they have 74% debt to equity ratio. It could be, as long as it's under 1, I'm usually okay with it. But it'll be interesting to see how this does move. There is always that potential for sure. All right, Haggis says, what was the 2x leverage ETF? I don't think Burgers mentioned exactly which one it was, but usually if you go into here and if you just type in bull, you'll start to see, like here's a gold miners 2x daily bull. This one here, Canadian Bank 2x daily bull, natural gas daily bull. So usually you just have to type in something like bull, or you could do bear as well. And you can get some of the DUX bear stocks if you're predicting something to go down. But like I said, be careful with leverage because, when things go wrong, they go horribly wrong. Like personally, I will play them. But I will play them on single day frames. Like I will not hold a 2x bear or a 2x bull overnight. I will not, because I have no control over what's happening in the, because most times it's not even so much a stock. A lot of times it's going to be a resource or a commodity, and I can't control what happens overnight. Ian says, I watched the recap video. You are the Oracle of Ottawa. Yes, I have a feeling that name is going to stick. Hello, Joe. Good to see you. And Burger says, BABX. I'm long, $14.99. It's $16.30 now. So there we go. There we go. So yeah. Yeah. So guys, it is Christmas Day. So if you got your last minute questions, drop them in. Drop them in. I'm all, I'm always looking for questions, but let's see here. JJ says leveraged ETFs are solely for day trading, not recommended to hold overnight due to overnight movements. Yeah, exactly. Exactly. And I was day trading when I was using I used to use HOD a lot, which is a inverse oil. Let's see. Luke says I have XAD as a defense ETF. Any thought? Is there a better choice? Yeah, let's take a gander at XAD here. All right, so here's your aerospace and defense index ETF. All right, and let's take a look at the last year. So yeah, I mean, this has been, defense right now is kind of that big thing. So it's not a bad choice. I mean, I like this movement that I've seen. Let me just take a gander here at their debt. They're not giving me any of that information. Interesting. Well, probably that's an ETF. That's why. Duh. Of course. Yeah, I mean, going with an ETF is nice because you probably have exposure. I wouldn't be surprised if they have exposure to CAE in this one as well. So yeah, that's kind of one of those things. Like if I have if I'm looking at something defense or I want to get into that kind of sector, I'm probably going to use an ETF over just a straight stock unless I know something. Yeah, that's how I would handle it. All right. Sammer says all leverage CC ETF will have higher MER because, yeah, exactly. There's all that extra expenses, borrowing money, all that fun. Let's see. Only downer would be Trump. What do you think of Hut 8? I used to actually swing trade Hut 8 quite a bit. But then they did a reverse split, and at that point, I was just like, I don't want to. They're too expensive now. For what I was playing with them for. But I mean, they're going to do well. I mean, as Bitcoin goes up, so too will Hut 8. Now they are finally getting to that point with Bitcoin at the price it's at now that what they were making before the halving, they're getting there. And keep in mind too, a lot of these mining companies have also mined out some of their some of their hardware to AI as well. So some of them are diversifying that way. But I do think Bitcoin is going to look strong in 2025, and we have to see if we're going to get crypto winter later in the year. But I think for the first half of the year, it's going to be strong. Like I've been predicting a 120 Bitcoin before it retraces. It could go higher. It could absolutely go higher. It's already done a little bit better than I was anticipating. I mean, I was thinking we were going to hit 100K by the end of the year, but we almost got up to 110 at one point, and that's pretty darn cool. Let's see. Burger says, let's see. I'm mad, but Hut 8 bought the stupid Bitcoin for 100K, even though it cost them 17K to make their own. Yeah. I think, though, a lot of times what these companies have been doing lately is they've been looking at what MicroStrategy has done. And, a lot of companies, including Hut 8, are thinking, let's just get it on our balance sheet. Even though they can make them at 17K, it's still that they have to make them. It takes time. So if you want to really beef up your balance sheet, in this case, you kind of don't have a choice. And, if you're looking at Bitcoin going much higher, and eventually it will. I mean, there's only so many. There's only 21 million in total. You have to look at it from now. Like when Bitcoin is sitting at 200,000, you'll probably at that point be looking back at Hut 8 and saying, that's not a bad deal. That's not a bad deal. Now, if we're all wrong and Bitcoin just never does break through, which I think is highly unlikely, but in that case, yeah, that would be a bad deal. Let's see. If you were given the opportunity to manage an ETF, would you take it? Maybe. It'd be kind of fun. But at the same time, I think it would probably be very time consuming too. So, if I could still do what I'm doing right now and then manage an ETF, then maybe MTFN. Yeah, and then we could have a covered call version. So CCMTFN or MTCCN. I don't know. We could have fun with it. Let's see. Your insights are very much appreciated. Thank you. You're welcome. You're welcome. And Joe is like, yeah, Hot 8 is going to kill it. I know. I can't believe it. He already has the ticker. It's like everyone's planning my future. That's fine. Oh, that's so good. Berger says, I was asking the CEO of Hut 8 some questions about that, and if they were planning to hold names like Berkshire, Coca-Cola, safe names in their portfolio, and they said yes. Okay, that's good. That's good. MFCC. For some reason, when I look at MFCC, I start thinking of Manulife Financial. Leverage version, MFCL. Non-covered call, leveraged version, MTFL. Okay, but all right, let's take this. Let's take this. All right, so what if I created a variable? There we go. What if I created a variable ETF? So it would be, so it would use covered calls / leverage when the market was ideal. So let's just say, flat markets. We'll say flat markets or very slow moving markets. And it would not use any of them. It would become a regular ETF during we'll call mania. So if the market was absolutely crazy, so that could be a really interesting idea, because you could have an ETF that, like when the market's exploding, it doesn't use covered calls. It sort of converts its form depending on the overall market trend. That's why I would call it like a variable ETF. So then you don't have to have 3 different versions. It's like, hey, get into this ETF. We're going to change our strategy on the fly as the market, but it would be big market trends. Like if you're in a strong bull market and you have a small bear, a small little bear burp, you're not going to change. You're going to probably just leave it alone, considering the fact that you've got call options and things on it. But anyway, I don't know. It was just an idea that popped into my head. This whole idea of a variable ETF that we could play with. So, JJ, this is your fault. I'm blaming JJ completely on this one. But yeah, we could certainly do something like that. All right, guys. Now I do have stuff I have to do this afternoon, and I had a Christmas dinner I gotta go to, and all that fun stuff. So it has been fun. It has been fun talking with you guys this morning. I'm hoping the rest of your Christmas day goes absolutely fantastic. It's going to be fun. It's going to be fun. It's funny. I got nothing for you tomorrow. Nothing for you tomorrow. But Friday, we will, of course, have a new video drop. It's actually a deep dive on BMO. So just so you guys know what's coming up. So I will see you guys again pretty darn soon. Luke says, have a great dinner. Lisa says, have a great day, all. And we got a Merry Christmas from Joe. All right, everybody. I'll see you guys soon. And, have a fantastic day. Until next time, guys. Merry Christmas and have a good one. Take care, everyone.